Hello and good morning, everybody. This is Alex, Senior Account Executive at GDMFX. You're with today's European Session Outlook. We'll start with the North American markets. On Friday, North American stock markets rallied and the loonie neared 76 US cents after an optimistic outlook for oil prices suggested they may have reached their lowest point. The unemployment rate in Canada came out 0.1% worse than expected at 7.3%, and the net change in employment in Canada, it came out 3.4 thousand worse than expected at negative 2.3 thousand. The participation rate remained the same at 65.9%. The import price index month-on-month and year-on-year, month-on-month was better than expected. The export month-on-month is 0.1% worse than expected. The Dow Jones is 20 points up on Friday. It hit the highest level of 2016. The Nasdaq is 70 points up. The Dixie is down to 96.20 from 96.25. And for the currency pairs, we had the USD Canadian dollar 120 pips down and the USD JPY 100 pips up. It seems like the Canadian dollar gained some strength on the employment data and oil events. By the end of the week, we will have retail sales tomorrow from the US. The Federal Reserve's March 16th policy decision and updated forecast is a key event for the entire financial system. This is on Wednesday. The probability of a hike at this meeting is essentially zero. For Canada, on Friday we'll have the CPI. There's no events for today though. All right, on to the EU markets. After last week's events from the ECB, which had a major impact on the markets, I'll let you know the events that we expect to move the markets this week. The EU markets on Friday had the DAX and the CAC, they had no move. Today we have Eurozone industrial production month-on-month and year-on-year. On Tuesday, we expect CPI data from France, from Italy, and from the Eurozone, the employment change, and from Germany, the 10-year bond auction. On Wednesday, we have the ECB's non-monetary policy meeting. On Thursday, for the Swiss franc, we have economic forecasts, PPI month-on-month and year-on-year, interest rate decision from Switzerland, and from the Eurozone, the trade balance and CPI month-on-month, year-on-year. And on Friday, the German PPI month-on-month, year-on-year, and the European labor costs report for the fourth quarter. All right, on to the UK markets. We had the goods trade balance come out negative 10.29 billion, better than expected. Total trade balance non-EU is also better than expected. The total trade balance is negative 3.4 billion pounds. The consumer inflation expectations are at 1.8%. And after having its best rally against the dollar since June 2015 and gaining 1.3% during the week, investors will be wary on what Mark Carney and George Osborne will have to say about the state of the British economy and how that will affect the sterling's performance. The pound remains the worst performer in the group of 10 currencies. On one hand, there is a danger for George Osborne to introduce more austerity measures in his budget on March 16th, and there is the chance that we may hear a rather monetary policy statement from Mark Carney and the Bank of England the next day. Sterling also appreciated the most in a month versus the euro after Mario Draghi's surprise move to cut ECB interest rate on Friday. The sterling gained 1% versus the euro. The FTSE 100 gained 97 points on Friday and closed at 6,158. The 10-year gilt yields closed at 1.58% on Friday. The biggest movers for currency pairs were GBP JPY 260 pips up on Friday, 320 pips range, and the GBP Australian dollar 140 pips down on Friday, 240 pips range. This week we'll be expecting many major events, especially on the UK's Super Thursday, as they call it. Tier 1 events, Bank of England interest rate decision, Bank of England asset purchasing facility, Bank of England MPC vote, the minutes, Of course, Mark Carney's speech is also there. And for Tier 2, we have a monetary policy summary and the budget report as well for the UK. All right, on to the Asian and Pacific markets now. Shares were up in Asia early Monday, extending a 4-week rally ahead of key meetings this week by central banks in the US, as I've mentioned, and Japan. We had Chinese news, retail sales year on year 0.68% worse than expected at 10.12%, and industrial production year on year 0.2% worse than expected at 5.4%. In Japan, we had good news, machinery orders year on year 12% better than expected at 8.4%, and month on month again 12% better than expected at 4.2%. In the early European morning tomorrow, we'll have the Japanese Bank of Japan press conference, interest rate decision, and monetary policy statement. So we'll see if Kuroda and the Bank of Japan are going to respond in kind to Draghi's shock of the market last week. A failure for the Bank of Japan to expand asset purchases would likely result in a bout of Japanese yen strength. However, given the rise in oil, a pickup in risk, and a stronger euro on the back of their actions, holding may be perceived as the right move from here, even if they have negative consequences in the short run. All right, on to the last sector for the day, commodities. We had the Baker Hughes oil rig count. It fell by 9 to 480. At session highs, crude oil hit $41.03 dollars a barrel on Friday. This is the highest since December 3rd. The International Energy Agency said in a report that oil prices may have bottomed out. Gold had a range of $37 at $12.55. Silver had a range of 30 cents at $15.60. Crude oil had $1 range at $38.17 now. Natural gas is trading at $1.80 at the moment with a range of 8 cents. And for the week, on Tuesday, we have API weekly crude stock. On Wednesday, crude oil stock exchange. On Thursday, natural gas trend exchange. And on Friday, again, we have the Baker Hughes oil rig count. All right, thank you everyone for the attention. This was today's European Session Outlook. I'll see you again next time. Goodbye.